Hello, this is Zahra. We'll be with you with the global economic outlook in the week ahead, which is going to be the 31st week of the year. As always, first, let's review what we had previous week, and then we can see what we can expect from the week ahead. Previous week was a very busy week, especially mostly on news. In United States, we know that finally Joe Biden withdrew his demand to being as a nominee of the Democrats in the coming presidential election, and now that Kamala Harris is the not officially but non-official nomination of the Democrats, but it's going to be the officially as the finally yesterday also most of the until yesterday they really had too many of Democrats that they endorsed her, but yesterday also Obama and his wife also they endorsed Kamala Harris as a nomination of the Democrats. So now we can give a more chance to her as being the official nomination of Democrats. That made some changes in the market. That made some changes in the percentage of the winners of the stuff like that. So made some more uncertainty, created some more uncertainty in the market and pushed the stock market lower. Last week also we had another important things, like for example the rate cut in China. We had a rate cut in China. The economic calendar was so busy with the data from the China and European economies that they missed the estimates and expectation. GDP in China missed the expectation. PMI numbers in China missed the expectation, both for the manufacturing and non-manufacturing. In Europe also, last Wednesday, we had a manufacturing PMI numbers from the most European countries. And in Eurozone, we missed with almost in all the countries, we missed the estimates, and we showed that the economic growth in both service sector and the manufacturing sector, it is lower than weaker than estimates and weaker than expectations. So that pushed a little bit more pressure, made more pressure on oil and energy prices in general. However, in UK, the data were somehow I mean, a lot like the optimistic than comparing with the European, the Eurozone and European countries, other European countries. In United States, we had amazing numbers in the GDP. GDP increased by 2.8%. This was like, here it's 2.8% in the second quarter, which is amazing. And durable goods orders, on the other hand, fell by 6.6%. I mean, really the mixed numbers. Still, durable goods orders, excluding transportation or core durable goods orders, increased by 0.5%, somehow positive. Initial jobless claims, again, at 235K, were optimistic, were a little bit better, but still, we should remember that it's a summertime and we have a short-term jobs. These short-term jobs, they are not officially the jobs, but they can draw down the number of the initial claims for unemployment benefits. But if you go to unemployment level, no, it's not changing the unemployment. It's just reducing for the short term the requirements or the applying for the unemployment benefits. In other countries, we had last week we had the interest rates decision or central bank meetings in Turkey. Held the interest rate at 50%. We had interest rate meeting in Canada. BOC cut the rates by 25 basis points as the inflation was lowering and GDP was weaker than expected. In Russia, but again another increasing of the inflation from I think 6.8% or 7.2 or something like that to around 8%. I don't remember exactly, but it was something like that. After that, the Central Bank of Russia, they increased again the target rates from 16% to 18%. That helped a little bit Russian ruble to gain a little bit some strength against US dollar, but generally, if they do not do something else, probably that can lose the momentum. And again, we see the USD ruble around 91 and 92 in next week. But the main focus of last week was the Friday's personal income and spending data. After that, we saw the inflation is a little bit better than expectation and increasing and falling. Now the PC price index and core PC price index also, they showed that the inflation is under control, and it was more optimistic when we saw that the average income also increased by only 2%. That helps to say that in the next month, still the income is lower, the people have less money to spend, the people will have the demand will decrease, and with lower demand, we can expect the lower prices as well and lower inflation. So that generally the numbers, they showed that the inflation somehow is under control. But it was the last week. What we will have in the next week. Next week going to be an amazing, crazy, and busy week with the central banks meetings in the United States, Japan, UK, Switzerland, Brazil, and so many other countries. But mostly what we'll talk about, UK, United States, and Japan. People are going to check what central banks may decide. On economic calendar on Tuesday, Monday will be a week, somehow the white week, but on Monday we will have a GDP in Germany and Eurozone. The GDP in Germany and Eurozone in both, we are expecting to see a 0.2% increase in the second quarter, which means the annual increase will be a little bit around something like 0.4% in Eurozone and 0% around 0% in Germany, which is just like annually. Yeah, they're a little bit better than can be a little bit better than the first quarter, but still the economic growth in the Eurozone will be weak, and these numbers are supposed to show these weaker numbers. On Tuesday, in the United States, we will have a CB consumer confidence, which is very important and must be watched closely. CB consumer confidence is expected to fall down again under 100 mark. That shows that with the lower income, consumer confidence also is falling, so the inflation is more under control, but economic growth can be lower because GDP, yeah, we saw that the flash GDP at 2.8%, but it doesn't mean that the revision also can stay at 2.8%. Most probably with the lower consumer confidence that we are expecting to see, the GDP also in the next month, in the revised data, in the final numbers, it can fall down much less than 2.8% that we had last year. JOLTS also will be published on Tuesday, where we are expecting to see JOLTS under 8 million again. Most probably it will be under 8 million, 7 million, 800,000 expected market expectation, which means that the job market continues to fall down, continues to cooling, but still I have to mention again, it's the summer, baby, and then during the summer we are having usually the short-term jobs, and these short-term jobs maybe change a little bit the game, but still after just like if at the season adjustment, if we do the season adjustment, we can see the weaker labor market. Inflation on the Australian inflation on Wednesday will be watched closely because the Australia and New Zealand, they were the countries that inflation after the falling after several months rapidly started increasing in Australia and New Zealand. That caused that Australian central bank to increase the rates after that they cut the rates to 4.5%. They increased again, and now but in New Zealand they didn't cut and they didn't increase. But generally, they hold the rates in higher levels, and they again, even the sign that if the inflation again start to continue goes higher, we will cut. We can do the more just like more hawkish policies, and we can again increase the rates. But still, I don't expect that the central bank in Australia and New Zealand they increase the rates. But now we are expecting to see the lower inflation in the second quarter, which means that the central banks in Australia and New Zealand also they can start cutting the rates from next meeting. In China, we will have the PMI numbers for both manufacturing and non-manufacturing sector. We're again expecting to see the weaker numbers, which means more pressure on oil and energy prices. And we'll talk about the BOJ meeting later. And inflation in the Eurozone also, we talked about the inflation. I talked about the inflation, GDP. The inflation in the Eurozone also expected to show the 0.2% for the headline is the same, also 0.2% for both headline and core inflation, which means that the headline inflation most probably will fall to 2.4%, and the headline and core inflation will fall to 2.8%. Most probably we're going to see these numbers. That means that the inflation is under control in Eurozone, and we can somehow expect that the central bank in the Eurozone also, after the holding their rates this meeting, in the next meeting, they can cut the rates in September. That's gonna be the most expected number. Then again, in after increasing the rates in Russia this week, we will have the GDP numbers and retail sales, unemployment rate. We are expecting to see the weaker retail sales. Unemployment rate most probably will stay again around 2.6, 2.7%. I mean, the lower unemployment rate is because of the war, and the most young men they moved to the headline, and now they are with the condition that the conflict that they have between Russia and Ukraine. So it's expected to see the lower unemployment level. So it's not surprising, but the weaker number probably we can see in the GDP. And also the retail sales. GDP will fall. You know, the GDP in the last month has been increasing more than 5%, and now it's around 4.5%, and while the retail sales also is falling down. So compared with the inflation around 7%, in retail sales less than 7%, which means that the real retail sales is negative, it's not a positive. And on Thursday, I will talk about the meeting. And now on Thursday, we will have more numbers of the PMI numbers, ISM numbers from manufacturing PMIs, manufacturing employments, general ISM numbers in on Thursday, which is going to be show the numbers for the July, most probably will be weaker than expected, and with the but it's just a day after the central bank meeting will not affect the market. But still, on Friday we will have the labor market data. This labor market data from the United States, NFP numbers will be very important, because on Wednesday meeting we are not expecting to see any changes. That's why the labor market data will give us more idea of what central bank in the United States can decide in the next meeting. That's why the NFP numbers on Friday will be very, very important to watch. We are expecting to see about 180,000 till 200,000 newly created jobs, but unemployment rate will be stable at 4.1%. Why? Because most of these jobs, they are short-term summer jobs, and they are not counting as official jobs. So the unemployment rate will be steady at 4.1%. And now, you know, these jobs also, they are not high-paid jobs. So the average income also will stay around 0.3% on a monthly gain. But annual gain will expected to fall to 3.7%. This falling to 3.7% is going to be the lowest piece of increase in the last 3 years, and can give us some more ideas, can give us some more outlook of what's going to happen in inflation, which means that we can expect that just with the lower income, we know that the real personal income also increased by 0.2%, and with the lower average income at 0.3% and monthly, also we can expect that inflation can fall down, because people will have less money to spend, less spending, less demand will fall the prices, can cool down the prices. That's the economic calendar. But the central banks meetings. The central banks meetings, let's go start with the Wednesday. Wednesday, we will have the first BOJ meeting. BOJ expected to most probably they will hold the rates at 0.10%, but there is also the chance of increasing the rates by 0.1%, which means that there is a chance to see the rates at 0.20%, or if we don't see the rate hike in this meeting, most probably they will have some signs in their statement about the rate hike in the next meetings. That higher chance for the rate hike in the next meetings and this meeting and next meetings help the Japanese yen to increase against US dollar, euro, and most rivals that it has, most currencies in the market. This is about the BOJ. So BOJ will be the more hawkish tone, so it can help the Japanese yen put more pressure on Japanese stock market. At the same day, we will have the second day of the central bank meeting in the United States, and Fed will publish its statement, and then Mr. Powell, the Fed chair, will have a press conference. We don't expect to see any changes in the policies and the rates this meeting, but what markets expecting to see, how they're talking about how they mention and talking about the rate cut in the September meeting, and will they have any sign? Will they say anything about the next rate cut, possible rate cut in November or December or not? That's also very important. Will they mention about anything about that or not? So markets will be very carefully watching about this to see what's going to happen and what they can do. So this is what they can say. So this is very important about that's why the press conference will be very important to see. So no change in this meeting, but signs about the September and December or November meeting will be very important, what you're talking about. Generally, we are expecting, since the market is expecting more than 93% of not cutting the rate, holding the current policies, and more than 90% of possible rate cut in September, that helps that the market already pricing this process. So maybe in a very short term, we see some like external extra movements, but generally, most probably we see no change in the market. I will show on a chart, but on Thursday, let's say that also about the Thursday. Oh, I forget. I have to talk about the coming. I sometimes forget about the earnings. Let's say talk about the central bank meeting in UK, and then about the earnings. The central bank in the UK, the MPC will has 9 members. Most probably 7 or 6 of them will vote for rate cut, and 2 or 3 of them will vote for holding the current rate, which means the number of these numbers will be important on how the market reacts, but generally we are expecting to see 25 basis point rate cut. Inflation is on the target, in BoE target for the 2nd month in a row. At the same time, we see the weaker labor market with the 4.4% unemployment level. That means that the central bank will have enough reason to cut the rates by 25 basis point for this meeting. That means probably means the weaker British pound and helping the stock markets in UK. But on earnings front, we will have busy week on earnings front as well, because this week the giants will publish their earnings, their reports on Monday. Let's see. Last week, so earnings so far we're not so good, but we're not so bad. Generally, the giants, the big companies, the blue chips, they couldn't convince the investors that everything is on their way and they can increase much higher in the next month. So the outlook also, they were not so impressive. That's why the stock market, they were under pressure. For this week, on Monday, McDonald's will publish its earnings, which will be very important on Monday. And then on Tuesday, we have more earnings to watch closely. Microsoft, L'Oreal, AMD, Pfizer, Caterpillar, they're the most important, Airbus, they're the most important companies that they will publish on Tuesday. On Wednesday, we have more to watch. On Wednesday, let's go down. On Wednesday, we have a Meta Platforms, we have a MasterCard, T-Mobile, Qualcomm. These are very important companies that we have to watch. Most of them, Airbnb. Most probably we will see the weaker number this week. Don't be so optimistic about the stock market and earnings results for this week. And then on Thursday, let's go see the Thursday. Wow, the Wednesday is very busy. The Thursday we'll have Apple, Amazon, and Toyota, Shell, Intel, very important companies. Mitsubishi as well. So Booking.com. So the Thursday will be a killing day. Apple, Amazon, Toyota, Shell, Intel, Mitsubishi, Booking.com. They are very important companies that we have to watch. And again, Apple will not have a possible, probably the general income will be a little bit weaker. Amazon also same. Generally, I don't expect any surprising number, positive surprising number, big number this week, which cannot encourage the stock market to increase. So that's why I'm telling that in the week ahead, we will have a more pressure on the stock market. On Friday, ExxonMobil and Chevron, they are the energy companies. They will be very important to watch. Let's see the charts. If we go and check the charts, here are the charts. If you're going to see the chart, this is the US dollar chart. US dollar have been falling in the last 2 weeks and then in the previous 2 weeks, but the last week it was a little bit sideways, moved to sideways. I talked about that last week between 104 and 160 mark. But for the next week, with the expectation, decision, and data we have, more pressure on US dollar will be more likely, but still it can hold itself between 103.60 and 104. So this is the new area that we are going to see the US dollar during the next week and weeks after that. On the stock market, with the expectations that we have from central bank, yeah, the rate cut, the signals of the rate cut can help the stock markets to increase, but at the same time, the overall disappointment that we have against in the stock markets, and also the earnings that we are not expected to see some special earnings. So that these numbers also together will help to put more pressure on the stock market. So most probably, the central bank meeting can slower the bears and falling downtrend, but it cannot change the overall downtrend in the market. That's about the stock market. And the gold. Gold still is demand. Gold still is buy, especially as long as it's traded about 2,300. Generally, gold is still in the demand, and we can see higher numbers for the gold as the geopolitical tension is there. Risk in the stock market is there. Lower US bond yields also is there. With the lower yields, we know that we have a more demand for gold as well. So the gold still is in demand, but for oil, we cannot see the same positive. We cannot be that positive about the oil as well, because as I told, the weaker economic data we had in Europe, weaker economic data we had in China, and we are expecting to see this week, they are all putting more pressure on the gold, on energy demand, on energy market, especially on the oil and gas, especially if we are talking about the oil. So oil price will be still under pressure, especially as long as it's trading under $78. Next target can be $72 or $73, something like that. And about the Bitcoin, we know the Bitcoin 2024 conference is going on. Donald Trump and Kennedy is probably, not probably, they will have a speech this weekend. Now, there's just like sentiment is positive in a cryptocurrency market. It can help the cryptocurrency market to increase higher, but it doesn't mean that it can increase so high for now. But still, $72,000 is the next target. But generally, since the JD Vance and Trump, both of them, they have supporting the stock market, supporting the cryptocurrency market, while we have a more chance for beating this for winning the Trump and JD Vance, we have a more chance for the cryptocurrency market to increase, but it's going to be the sentiments and going to be the short term. For higher numbers, we have real results, not just the sentiments. For now, it's a positive, and $72,000 is the next target for us. It's generally what had last week and what we're going to have next week in the market. If you had any other question, don't forget to write down in the comments. I'll try to get back to you as soon as possible. Have a good week ahead. Bye.